this morning and I'm looking at the various speakers and I'm going, okay, you see this list. You go, Dan Busby, my goodness, Dan's coming to speak, and what an exciting time. And then you see John, and then you see Ron and all these gifted men. And I'm looking at them, David Lee, what in the world are you doing here? So I looked at the mirror this morning and I asked the same question, what in the world are you doing here? I will tell you one thing that we all share together, and hopefully you've been hearing it throughout, is that we all share a passion to want to serve your ministry in some form or fashion. We want to equip you. We want to come alongside you and walk this long journey, and very difficult journey that we stand on today. And so let me give you a little bit of clarification in terms of, based on the title. Obviously the title is dealing with how to increase the chance that your loan's going to be renewed. Let me broaden that out just a little bit more, because I want us to spend probably the next 50 minutes in talking about more than that, although that's going to be a significant portion of this. How do we help you and equip you with information so that it does help you increase the chance? Remember, it doesn't say how to guarantee, okay? Doesn't exist. How to help increase. But more than that, I'd like to spend this next time just talking about overall in terms of financial health for our ministry. What's keeping you guys up at night? What's keeping you tumbling? What's making your wife look at you and say, will you just stop it? You're worried about your financial situation, maybe. Maybe donations are down, enrollment's down, giving's down. And so let's just kind of go off on a tangent a little bit. Would you just turn to the neighbor? Now, keep in mind, I've been in children's ministry for 19 years, so I need some objects, and I don't have one, so I'm holding on to this. But would you turn to the neighbor and say, just for one, just a word of encouragement, and say, you know what, you look absolutely beautiful. Just do that, because, and frankly, guys, don't get offended, okay? It's just, you look good. Because I know right after this, you're going to be entering a pretty significant traffic. So hopefully that'll be the good news of the day. Let me give you a little bit of disclosure here. Okay, my friend emailed this to me. I did not do anything to manipulate any of these slides, but it kind of gives you a little bit of the signs of the times, okay? And if I offend anyone, I'm sorry ahead of time. Today, Apple's a little bit different. Those 2 bites are probably back. It's probably back to where it was. It's doing well. Some of these you'll recognize. These are the signs of the times, isn't it? I'm sorry for those who drive a Chrysler. I rent one. I'm sure none of us have this. I'm sorry, I used to have a Ford, but I think they're doing much better. Yeah, the projector light is okay, and my favorite. But that truly is the case, isn't it? Life is tough. Life is very, very difficult. Ministry is very, very difficult. There's some statistics out there. GuideStar recently came out in a study in June 2010. 7,014 responses. It's a pretty good sampling. But here's some of their general information. If you've seen this, maybe you've taken a look at it already. But it's a pretty recent study in dealing with the nonprofit sector. We're not dealing with primarily evangelical ministries. We're talking about nonprofits in general. And they could be foundations, they could be hospitals, but they are nonprofits. Those organizations depend upon donations to be able to continue to survive. So here's some of the staggering statistics out there. 40% of the 7,014 reported contributions dropping between this time period of January 1st and May 31st of 2010, between the same time period in 2009. You're probably just going, yeah, I feel that too. But here's where the challenge comes in. When you see donations dropping and giving dropping, and then you combine that with this next statistic dealing with 63% having seen an increase in demand for their services. You see the pressure. You see why you're tumbling and you can't get rest. I'll step into the sunlight a little bit more into the spotlight, because I just want you to see that I truly am an Asian, right? I'm an Asian, and I bring that up because I serve in a Korean American church. And what's very important to our church is, in our staple food is it's rice. Rice is very important. So we feel this in our church too. We feel an increase in the request for services. Maybe your benevolence requests in your various churches and ministries here. Or maybe just scholarship for schools. We need help. Our kids need help. Well, in our church, we made a decision to go ahead and help our Korean American community by putting a box out there in unlocked. It's just a box, and it's full of 25-pound bags of rice. We don't ask them to sign in. We don't ask them to sign out. We just say, here you go. Hope this provides. And maybe that'll bridge a relationship for us to be able to eventually talk to them. But you're feeling this pressure, and all of us are in the same boat. Take a look at some of these other statistics here. 60% attributed decreased contributions to decline in both the number of individual donors and size of donations. You are seeing maybe an increase in your attendance in your church, but you're seeing your donations drop. Why? Because people are tightening their belts. You know, that challenge always is, you know, maybe we have some senior pastors. I think I saw one pastor here. But the tension between the pastor and the administrative staff. The pastor says, why do we have so much money? Let's spend it. And the administrative staff says, please don't do that. But if you ask the individuals within the various rooms and the finance committee members and say, in your family, are you spending everything that you bring in? They're not. Consumer savings rate is at an all-time high. People are saving for the rainy day. And yet we practice that in our very families, and yet why don't we translate that over into the church, in the ministry, in the schools, in the church organizations? We need to do that because there's greater risk in the ministry. Take a look at some of these. 17% used one or more volunteers in previous paid positions. Combined together with this, at 32% increased their reliance on volunteers. Back in October of 2008, Dan Busby came out to Colorado Springs, and we had a financial forum like this. And one of the questions that was asked by one of the parachurch leaders, and he said this, hey Dan, we're kind of in this, we don't know yet what's going to look like. What do you think it's going to look like? And I remember his response. He said there will be an increased reliance on volunteers. You will see volunteerism rise in ministries. Why? Because we believe that nonprofit organizations are better equipped to be able to endure these very challenging times over for-profit businesses. Why? Because when's the last time you've seen actually a for-profit business go to volunteers and say, hey, would you mind just working for about 32 hours? You know, you're not going to get paid anything, but would you be willing to serve? It does happen. Volunteers are willing to serve in your ministry, but it's utterly important today that your mission and your vision is that much more clear to them. I've been sharing with the group up in Livermore and San Diego yesterday about a good friend of mine who planted a church in Fremont, California. 2 years old. They're running about 500 members now. One senior pastor. 4 of their full-time staff quit their 40-hour-a-week job to join the staff as a volunteer. So we see those glimpses of hope. We see those glimpses that mission is important. We do need to go back to the mission and reassess it. 8% of the 7,014 indicated that their organization was in imminent danger of closing. Well over 560 organizations. I think that's a higher number because 4% indicated that they didn't know if they were in danger of closing. You know what? If they don't know, you're in danger of closing, right? If your board asks you, hey, how are we doing? You go, oh, I don't know. Ooh. That's a cue to begin asking some more questions. So here's GuideStar kind of consensus. 2010, they said, it has been and continues to be a difficult financial environment for nonprofits. This isn't rocket science. This is what it is. And we would be in agreement. This is going to be a long road ahead. And we don't know what the road ahead looks like. But God has placed us here for a reason and for such a time as this. And there are ministry opportunities galore for us to be able to continue to reach out to our community. We cannot afford to have those 12% organizations and nonprofit organizations close. We can't afford to have 1% of churches closed today. Because we need ministries. We need churches there for your community and for your people. I got this email from Kaiser Permanente, they're our healthcare provider. And this kind of glared out at me in terms of their statement dealing with the single most important thing you can do for your health today is to understand your risks. Let me ask you, do you as a ministry understand your risks? There's a number of different risks. There's operational risk, there's financial risk, there's staff risk, personnel risk. There's all these different risks out there, but have you identified what those risks are? I think it's very important for us to understand what the risks are in order for us to be able to determine the solution to those risks. And how do we not eliminate it, but mitigate it? How do we manage it? How do we address it? What I'd love to talk to you about real briefly, I'm going to dedicate only one slide to this. How do you measure church health? I'm not here to talk to you about church health in the sense of spiritual health. Okay, I'm going to leave that really to the senior pastors and the CEOs and those leaders who are directed to be the spiritual leaders of their organization. But here's an interesting one. This was a survey done just recently, August of 2010, of 32,000 churches across the United States, cross-denominational. And it came out from the Christian Century magazine. They said this. This is what they determined to be the four major factors of what they see as a healthy church. Small groups and programs. Very, very important. We see spiritually healthy churches having small groups and programs. We see healthy churches spiritually having worship services that mix traditional and contemporary styles with an emphasis on relevant sermons. I don't think that's ever going to change. Pastors who work hard on mentorship and cultivation of the laity, along with the fourth, emphasis on effective lay leadership. Imagine what our ministries would look like today if we started that long time ago and equipped the people of our ministries, our donors, our congregation members to serve. We'd be able to endure through this, I think, much more easily. But that's the spiritual health component. I want to spend the remainder of the time dealing with the financial health component. The benefits of an annual physical checkup. I turned 40 a couple of years ago. I know I don't look it, but I really did. And when you turn 40, there are those milestones, and you're supposed to go to the doctor. And my wife kept saying, "Hey, honey, you need to go. You need to go." Like, okay, I'll go. So I go and see Dr. Mike, and he does all these tests on you. I don't know what he's doing. I don't know where he's poking, he's prodding, he's doing all that stuff, and I'm going, okay. And then finally we sit down and we talk about it. He says, okay, here's the results. After your blood sample, here's the results. Here's your cholesterol level. Frankly, I don't even know what my cholesterol level is today. I only know it when he actually sits down and talks to me. But when he tells me my blood pressure, and I still don't know, but if he tells me my blood pressure is 170 over 110, he and I just look at each other and we just go, huh? And there's silence. And he goes, are you okay? And I said, no, because I don't know what that means. Is that good? Is that bad? Tell me something. He goes, let me tell you a little bit about what this top number is and what this bottom number is. Okay, thank you, but now how do I get it to the point where I need to be healthy? Diagnose me. Let me ask you the question, how many of the ministries here today know who to go to who will tell you the truth about your financial health? Maybe you don't have any. So I'll give a shameless plug to ECCU, okay? Because I work here too. If you're wanting a financial checkup, we have a tool, and this is what I'll be talking about a little bit too. But we have a methodology. I hope you better understand that. In determining off some benchmarks. You know what? This is good, this is bad, this is, we need to have some deeper conversations. Let me move on here to the lenser's eyes. In terms of who are the stakeholders in your ministry, it's important, especially for those ministries who have a loan, you need to begin engaging in conversations with them today. Okay? Let's say, for example, you just got financing and you're not coming up for maturity in 5 years. You need to begin having conversations already and saying, okay, how's the landscape changing? How are things changing to the point where, hey, can you take a look at our financials? Because you're probably being required to submit those. Have those conversations early and ask them, is this out of whack or is this good? So what we take a look at in this particular tool back here in dealing with the benefits of an annual financial checkup, this is a tool that we created to help ministry leaders understand, especially the senior pastors understand, okay? From a 35,000 foot level, are we good or are we bad? This is what I kind of like to refer to as a report card. I carry this with me as a reminder. This is my son's report card. It's his third grade report card, and he got a C in algebra. Well, he wasn't in third grade. This is his most recent last year. and he got a C. I said, son, Andrew, we need to have a conversation. No, I'm just kidding. He ain't that smart. Trust me, he got a C. So I sat there and I said, Andrew, hey, you know what? We need to have a conversation. Remember Tower of Babel? You know, Tower of Babel, and after people tried to make a name for themselves and then the language is dispersed. You know, there's a reason he called us Asians. He did not call us Cesians. He brought it up to an A minus. Get the point across. But I use that as really an analogy to really think about what's a report card for? Now this tool in itself is not a report card, okay? There's not a grade that we give you. But the reason for a report card, mom and dad gets this, is because we want to understand. We have a cluster of schools right here. You love this, right? It's like report cards help measure progress. What does your church or ministry use to measure financial progress? Do you know if you're doing well or doing bad? And on a more important note, who's interpreting that information and that data? You see, report cards are simply a tool to help everybody land on the same page. Okay, we understand where we need to get to, so let's keep working on it. When we take a look through the lender's eyes, here are some of the major factors that we do take a look at. Take a look at, in terms of income. In this particular tool, what we have is income today is very, very important because lenders want to see direction. All of these different categories, we kind of condense down. If we could have all the underwriters from ECCU come down, boy, just incredible wealth of information. They have, I think, a line of like 50 line items where they're analyzing and looking at different ratios and taking a look at where you're at. And these are some of the major ones that we take a look at in walking through a ministry and dealing with their overall financial health. Income. Income is extremely important because it just drives the core business and the core ministry. You need funds to be able to continue to do the ministry that you do. And what we'll do is we'll take a look at the direction of the income. If you're sitting across a lender and you see continual drop in income, how are you going to convince a lender, oh, don't worry, we turned it around? I know it's dropped 10% over the last 2 fiscal years, but you know what? I feel like it's turning around. Bankers do have feelings, but they don't rely on feelings to make decisions. It's very black and white. So do you see what I'm saying? Direction is very important. When we take a look at current cash and cash equivalents, cash is king today. Small k. But it's extremely important. When we do an assessment within our ministries and the 2,000 ministries that we serve today, we try to identify those particular ministries that are struggling. Why are they struggling? The number one reason ministries are in trouble today, and our vice president of credit would agree, leadership. Leadership is the number one. Number two, cash, because they don't have enough. Do you know how much you need? And so we've been writing a number of different white papers and articles and dealing with this particular issue. There's some back there as well. But do you know how much is enough? Because your senior pastor is going to want this much. You're going to want this much. And there's some happy medium in between. You know, if we gave a big, broad stroke, just kind of number out there, typically for a church, we would say you probably want to land somewhere in the neighborhood of about 90 days. 90 days of operating cash. Now, historically, pre-2008 days, what an underwriter would typically say is, you know what, sufficient liquidity would be 3 months of debt payment. So if your debt payment is $20,000 a month, $60,000, you're fine. Today, we look at it differently. It's not 3 months of payments, it's 3 months of operation. That's a bigger number. For a school, typically you're talking about 90 days is probably the base, but it could go up to probably about 120 days. Each ministry is very, very unique and very, very different. But that's a safe range to sit under. If you're a parachurch organizations and those two categories you don't fall under parachurch, you're probably looking anywhere between 90 to 180 days of operating cash. Do an assessment and just take a look at it and see how much you have. Now what we do have is we have actually an assessment and a tool to help you as a ministry understand your unique DNA of what that cash and cash equivalence needs to look like. And any of the guys in the blue would be able to help you out with that. But this is our desire to help you become more financially healthy. Again, our communities need you. Take a look at attendance and enrollment. That's extremely important too. What's the direction? Talking with Cecil right there. Enrollment's down. Enrollment is down. They're tightening their belt. Attendance. There are some ministries where it's increasing. I just visited a church earlier this week. They just built a new facility. 85% increase in the last 60 days. Granted, it's a brand new facility. So people like new buildings. But you're not seeing that as a normal. Typically, you're seeing a drop in attendance. Even if there's an increase in attendance, there's probably people who have kind of resorted to their last end. I'm at ends. I have nothing else to rely on. Maybe I should go take a look at the church. So what a wonderful ministry opportunity. Again, sense of direction. What's the direction that it's headed? Staffing expense. Staffing expense as a percentage of your income. Let me throw out some very generic numbers. And again, please take it with a grain of salt. I've gotten some pretty strong feedback and saying, are you kidding me? Each ministry is a little bit unique, but here's the numbers that typically an underwriter is taking a look at. Staffing expense as a percentage of your total income. Typically for a church, you'd be taking a look at about 35%. Okay? That includes your pay, including your benefits. Okay? All of your staffing expense, 35%. Now, I understand in ex-pastors, Dave Fletcher just recently came out with a brief study of 10 ministries, and the average was sitting somewhere close to about 50%. Okay? For those ministries. But you have to understand, through the underwriter's eyes, we talked about the stakeholder. Who's your stakeholder? If you have debt, you better understand, and you need to understand how the lender is dealing with it. So 35%. If you're taking a look at schools, boy, staffing expense is a much significant portion because if you don't have teachers, you don't teach. So you're probably taking a look at somewhere close to about the 65, maybe 70 if you want to border close. But underwriters don't like when the numbers are higher, except for when it's income. So, in terms of the schools, somewhere around the 65, 70% range. Okay. For parachurch organizations, you guys are so different, so weird, in a very good way. Okay. But those are the ministries that we need to take a look at on a very case-by-case basis, because it depends on what I'll eventually talk about is called coverage. Here, key ratios. Key ratios are absolutely critical today. If there is a to think that I'm information systems in the Colorado office. How do you do this backwards? Trust me, I am information systems in Colorado Springs, but they don't call on me very often. Let me go back to the key ratio piece of it in terms of the debt coverage. Debt coverage is essentially saying at the bottom line number, if you have your total annual debt payment that you're paying, for all intents and purposes, we'll throw out a $100,000 number. If you're paying $100,000 in debt payment, your bottom line number after your income, net expenses, you come to this net income number. And after that, we'll take a look at two major categories that we'll be able to add back, which will be depreciation. Depreciation is a paper expense line item that said, you know what, I didn't write a check. My bookkeeper did not write a check for $50,000 and hand it to someone for depreciation, right? But it impacts your cash flow. It impacts your bottom line. So that really wasn't the expense that was incurred. Okay? So we'll take that $50,000 for insurance purposes in this case, $100,000 that's debt payment. We'll take $50,000 and we'll add it back. Okay? So we'll add it back. $50,000 available to service $100,000. Then we'll take a look at interest expense, interest that you've already paid. Because you know what? Once you renew or refinance, you'll have that $50,000 again available. Again, to simplify it, let's say it's $50,000 of interest expense. So in this particular scenario, you have a $100,000 debt payment, and you have $100,000 available to service $100,000. Okay? That's good. But That was probably pre-2000 again, 1-to-1, 100%. Today, the ante has been raised. You're probably taking a look at, and again, just in a very general sense, typically what lenders are taking a look at, much more cautious. They are looking at anywhere between 110 to 125%. So you see how all of a sudden the net income number becomes very, very important. That's why it's important, especially if you have debt, that you can't simply just spend everything. That's one of the other things that our Vice President of Credit said. I said, hey, Steve, if you could talk to ministry leaders, financial officers, what would you tell them today? What are some things that are best practices? But please tell them, don't spend everything. Don't spend everything. So that's why the ante has been raised. When you take a look at a lender, this is the number that they're falling on, debt coverage. They'll call it debt service coverage ratio, but the reality is this is the number that they'll first look at to determine, can we talk or can't? Debt service ratio, essentially this is a number that I shared with earlier before as a percentage of your total income that could be allocated towards servicing of your debt. 35% for churches. For schools, you're probably looking at maybe not north of maybe about 10%. So if your income is running about $1 million, boy, total debt payments for a school, probably don't want to land somewhere north of $100,000. Okay? Now again, each unique situation is very, very unique, very, very different. But there is a unique DNA to your particular ministry. But hopefully you're kind of getting the idea. The ante has been raised. In terms of the debt service and salary, that we take a look at now, your overall salary, which should be 35% for churches. Then with the amount of debt that you have, probably nothing north of 35%. You add those together and you come to this number that says 70%. Because frankly speaking, when your total income comes in, you only have 3 buckets to put that income into. Paying debt, paying your staff, and doing ministry. So that's why we take a look at the first 2 key categories, debt servicing and salary. And so if that number ends up becoming a little bit higher than north of typically what an underwriter's wanting to take a look at, more questions get asked. There was this one slide I'm realizing that I probably skipped over real quick in dealing with the 5 C's. Let me talk briefly about that, because this is typically the credit underwriting criteria that underwriters are taking a look at. You've heard about the 5 C's or sometimes the 4 C's. But capacity. Capacity is important, again, because today lenders are more concerned about your ability to make the payments than they are about wanting to take the collateral. You know, in days when things were going well, a lot of churches or a lot of organizations would say, hey, you know what? There are collateral lenders out there, if you've heard that term. Those collateral lenders, frankly, they're saying, hey, it doesn't matter if you can't afford the debt, you're putting 90% down payment. Frankly speaking, if you can't pay it, the property will. How do you think that's changed today in today's banking world? Do they want your property? Absolutely not. So really, in terms of the collateral piece of it, and in that other C, collateral, that could probably hurt you more than it could help you, okay? But in today's case, you're looking at loan-to-value calculations on collateral needing to be probably no more north of about 70%. So if you have an imminent date coming up that's a renewal, you have a balloon payment coming, and your property values, I don't know what's going on here in California, it's probably dropping, but collateral values are dropping. I don't know where the bottom is. Let me show you a brief example in terms of what happened in Colorado. This was an interesting scenario because we had 2 ministries. They're about 7 miles apart. Okay? These are 2 ministries that built brand new facilities of almost equivalent size, 7 miles apart. It was built 5 years ago. One property came in flat 5 years ago, same value, $3 million. The property that actually is in not as affluent of an area went up by 8%. What? The reason I share that with you is because it's just uncertain. We don't know what's going to happen. And so this process that we go through in terms of the financial health assessment is trying to help you as a ministry understand what kind of exposure you have. We had a church up in North Denver. 5 years ago, we did a financing on a project. And their property value, their appraisal came back 24% less than what it was 5 years ago. said, this isn't California. We didn't see a 24% increase. Why is there a 24% drop in value? It's just uncertain. And so in that particular case, the ministry literally had to come up with almost $1 million in cash. Just like that. So again, collateral is very, very important. One of the other C's, the third key, character. Character is asking the question, if you can afford to make the payment, will you make the payment? Will you make the payment? Again, the vice president of credit, he said the same thing. He said, boy, if there's another thing that I could communicate to ministry leaders is this. Character is so critical today. Character comes out during very difficult times, doesn't it? One of our gentlemen, unfortunately, had to have a real difficult conversation with a senior pastor. And in the conversation, pastor asked he shares his story and says, ask me a question. He said, what's to stop me from not paying you? Looked him in the eye, looked at the pastor in the eye, and said, how about integrity? See, character is extremely important, isn't it? But this is a very important part of ECCU's specific underwriting criteria because that speaks to leadership. The leadership's willingness to make very difficult decisions during very difficult times. Character. The other one kind of goes hand in hand, concentration of gifts. This is a C that's very unique also to ECCU. I just spoke with one of our chief underwriters and said, how have things changed a little bit? Today, if you take a look at your top 5 donors, okay? Take a look at your top 5 donors, whether it be within the school if you have donations, but more applicably, probably to the churches. Take a look at your top 5 donors and see if they represent over 20% of your total income. Okay? If they do, that doesn't mean everything falls apart. It just means, guess what? You've reached a threshold that all of a sudden says, let's ask more questions. What industry do they live in? The example that I share was actually years ago. We were talking with a church out in New York, and one of their at that time we were taking a look at the top 10 donors. And the top donor was giving close to almost $800,000. And this particular donor ended up being actually a New York Yankee. So the question again comes up with this. What happens in the conditions, the last 5C, in the conditions of where we're at today? And knowing the environment of a sports figure, do you think you want to rely on his $800,000 to service your day-to-day operations and your staffing expense? Because he could retire, he could get injured, or he could just get traded. So how we view concentration of gift risk is this. Take a look at your top donors and see how much they represent in total income. And if it feels, again, top 5 represents over 20, ask the questions about, boy, or maybe they're in commercial real estate. And they used to have just a fantastic year leading into the early 2000s, but now it's very different. So one of the best practices that's come out from that is a lot of ministries are doing this. They're doing a quasi-board restriction on the gifts of that top donor. They're saying, we're going to take his gift, and the donor has essentially given it unrestricted. We're taking his gift and we're going to tie it directly to a ministry activity. So let's say, for example, in a church, you know what, that mission trip that we always take to Thailand? Bob's donation comes in very faithfully. But Bob's donation will be the one to fund that. And if something happens to Bob's job, that trip won't happen for him. So do you see how that changes all of a sudden how you begin looking at budget, especially looking into 2011? You look at it with a different set of eyes. Maybe that's going to be too drastic. Maybe only take a look at 50% of that particular donation. Let me see if I can get this back on track here. So truly, what has changed? What's changed? I think we're finding ministries who once used to be mission-focused who are now in survival mode. They're no longer able to get excited about what's going on, about the new ministry activities that they're going to be doing in 2011 because they're concerned about what the donations are going to look like the next week or the next day. What does Sunday look like? I had a very, very challenging conversation with the ministry, a senior pastor, and and the district superintendent, and the bookkeeper and the treasurer. And here's a scenario where a church, and we were providing a lot of counsel to this to try to help them get through this, navigate through this. Back in 2006, they had a congregation of about 1,000, income running close to about $2 million, and the staffing expense was running about $600,000. Just a wonderful, wonderful church. They had a multi-purpose facility, having over 1,000 kids coming in for an indoor soccer game. You talk about ministry coming right onto your campus. Okay, so let's fast forward, December 31st, 2009, having this conversation with the pastor and said, Pastor, help us understand this a little bit. Your congregation right now is running at 382. Your income has dropped by half, and you're sitting on $1 million. And your staffing expense is $600,000. Sorry. We just hired a new music pastor in October. What's wrong? We need people to do ministry. Have you heard that before? Finally dawned on him when the bookkeeper says, Pastor, I don't know what to pay. I don't know what to pay anymore first. Do I pay the mortgage or do I pay the staff, which includes you? I will guarantee you that church is in survival mode. Our desire as a credit union is we want to get you out of there. Let's start somewhere. If your lender can help you, whoever it may be, talk to them and say, can you help us understand and help us? What has changed? Covenant. It's stricter. It's a little bit more difficult to try to get financing, isn't it? Some of you have probably experienced it. You'll see lenders probably beginning to require maybe even filing UCC filing against all properties on the facility. You're taking a look at maybe even some personal guarantee requirements by the board members. That goes well with the board members. Hey, could you sign this? Yeah. But you see what's happening is the lenders are beginning to mitigate their risk and the concern. So you need to be prepared for that. Less capital in the market, and frankly speaking, there probably isn't enough. There is capital in the market, they're just not letting it go. You know, you go back to Economics 101, supply and demand. There aren't as many players in the market in terms of church and nonprofit financing. They've kind of backed out. And so as they've backed out, what's happened? Still ministry. You see, we may be in a recession, but God's ministry is not in a recession. It's growing. And so as a result of that, you have an increased demand for financing. Well, where do we go? So that's the tension that's happening. Less supply, increased demand, increased cost. So that's why money's probably getting a little bit more expensive, artificially high. That's why you're not seeing a 3.25% that you just got refinanced on your home for your church. Just that right here. So less capital in the marketplace. But I love this. I wish I could give the proper credit to the individual who did this, who said this, and I can't remember. But I think this speaks to the sentiment of how we begin moving forward. Faith and finances, isn't that a real difficult conversation? Now, how do you balance faith? And pastor wants to say, you know what? God will provide. In the Calvary Chapel circles, it's where God guides, he provides. Right? And he does. But as we take a look at expenses, I love the way that this is just kind of phrased, that we no longer need to begin spending in anticipation of growth, because that's the question. If we build it, they will come. And the lender's question is, what if they don't? Do you have plan B, C, D? Let's no longer, as ministries, spend in anticipation of growth. That doesn't mean you have less faith. But let's spend in reaction to growth. Let's spend because we've seen the evidence of God working in the ministry. Indeed, stewards. You see, because the donors who are giving to you have spent countless hours earning, don't you think we have a responsibility to try to steward that with just as much effort, if not more? So faith versus finances. Here are some practical steps today. Build liquidity. Cash. You really need to begin focusing on building cash. Setting aside a reserve. Because there are multiple types of reserves. There are operational reserves for the fluctuations that happen between summer months and December giving. Operational reserves for unexpected types of opportunities that may come your way. Operational reserves for unexpected expenses that you may not have seen. Second one, build liquidity. Third one, are you getting it? Fourth one, I don't know how else to communicate this to you. This is utterly important. We have some resources available to help and a tool to help. Again, you better understand what that liquidity number ought to look like for your ministry. But seriously, real suggested practical steps, and I'm not kidding about building liquidity. It truly is. That's very, very important. The other piece in dealing with monitoring variances in budget. And what I mean by this is, when I spent a number of years in the management world here, I used to get these fun reports. These reports that were talking about variance in budget. Do you guys have those? Yeah. And so you take a look at that, and what do you do with it, right? Variance in budget, what we used to do is, when the budget was in excess of over $1,000, or whatever threshold that may look like for your ministry, I would be required to write it to my boss and say, hey, this is why I spent over. This is why the variance, both on the plus and the minus side. You said you were going to spend this. How come? Maybe a novel thought if we began pushing this down into our ministry leaders. I'm actually, as a children's pastor, I'm asking for this from my church. And my treasurer's like, what? What do you want? Why? I'm like, oh. Push it down to the people who are making those decisions to spend. Empower them and equip them to be able to do that. And hold them accountable. Because you'd be amazed at how the tone from the top begins to change. How we handle our financial matters in the ministry. If you just simply push down that variance. And just give them a fun report, put clip art on it, whatever you want to do, just to make it more friendly. But just say, why? So variance of the report. Here's some other suggested. Staff expense control. Again, just watch that. A report came out from Kiplinger October of 2009. Okay, so this is a study that was done by various for-profit organizations, the top 100. You're talking about millions and millions of dollars, in terms of $100 million organizations in revenue. So these are the brilliant minds of today in the business world. Said, if you could do something different today, knowing what you know, what would you do? What are some lessons learned? We would spend less, save more. Kid you not. Spend less, save more. These are the brilliant minds of the for-profit businesses. The other one they talked about in the top 10 was they would have made the difficult decisions much earlier. They would have made those difficult decisions much earlier. Open up the communication. Financial reports. Do you communicate this report? Do you communicate financial health to your congregation? You know that church that I shared with you about? $2 million, $1 million, $1,000 to $382, $600,000 staffing expense? I asked the senior pastor, does your congregation know? I could not believe what I heard. And he said, no. And I said, why? And the district superintendent looked at him. I want to protect my people. Good intention. But I take it into the context of the family. If we're having a tough time, you know what? I'm getting my 2 kids down and saying, we're going to sit down. And we're going to talk about this because we're in this together. How important is it for us as ministry leaders to be able to communicate that information? And so I'm not a marketing guru, but all I understand is this push and pull thing. Do you want to push the information out to them and put it in your bulletins and then have all these annual reports? Or do you simply, because frankly, some people just look at that and go, here, Johnny, go ahead and color on this. Or do you just make it available online and say, hey, you know what, if you're interested, why don't you go to our website and pull it out? Whatever it is, communicate the information to your stakeholders. How often do you communicate that? That's going to be up to you. And then here, establishing benchmarks and dashboards, ministry measurements. Now, seminary, we don't have a class on acrostics or anything like that, but I felt like I needed to do this. So we need to identify benchmarks and dashboards, measurement tools that are meaningful, measurable, manageable, actionable. Okay. So make sure that whatever you're going to measure, what dashboards do you have? I was talking with the CFO of the Christian and Missionary Alliance of over, I think, 2,000 churches. And Ken showed me his dashboard. I said, do you have a dashboard? He goes, oh, absolutely. Showed me his dashboard. One page, very simple. Green, good. Red, bad. Arrow up, good, uncertain. Depends on what side of the cash flow statement you're looking at. And then down arrow. I said, why do you do that? And he goes, it's for the non-financial people. It's very, very important. Make sure that it's meaningful, measurable. Make sure that you can manage it. Because you don't want a dashboard that looks like the cockpit of a 747. Oh yeah, which one have you taken a look at? Yeah, let me take a look at this. Here's a useless dashboard. You know what this is? TPMS, tire pressure monitoring system. I have this in my car. It is such a useless tool I've ever seen in my life. Have you heard the sound? It's like beep, and it goes on, and I'm on the phone, and it's like, what does that sound? It's like, that's my TPMS. I live in Colorado. My altitude changes going to work by over 1,300 feet every day. Pressure, high pressure, low pressure. And I thought, okay, maybe that's it, so I keep checking. I changed my tire about a month ago, all 4 of them. It's still on. Useless. This is what I mean by useless. Make sure whatever you're going to measure, whatever it is that you're going to measure, make sure that it's very applicable to your ministry. Make sure that it's meaningful to your ministry and to your people and to your constituents. But more importantly, especially, as you're communicating numbers, communicate life transformational stories. Donors want to know what kind of a difference you're making today. And the accountability that we have today is the bar has been raised. So we're going to take it back to Jack here. If you in particular want a specific assessment done for your particular ministry very uniquely from a cash, how much cash should we have, what kind of cash should we have, to your financial health assessment. Again, guys in the blue back there, you can talk to them. Thank you for your patience and enjoy the traffic.
A couple of points. Okay, questions. Each speaker offers to answer questions. Are there any burning questions that the speakers here? I see John back there. And of course, we all listen to one with the next questions. But are there any burning ones?